good morning everybody, or good day, whatever the time zone is where you are currently. For me it's the morning. Welcome to the weekly mentoring video for October 5th, 2020. It's Monday. As always, bring the disclaimer here telling you that this video is for informational education purposes only. Trading is risky, you need to know about this, and what I'm doing here is teaching you option trading and how to apply different kinds of strategies to generate cash flow. Simulated trading here, so you can see what's the status of our portfolio right now, and I will simply highlight the most important parts of that, and we will go through all the positions here and manage the portfolio today. This day will be a little bit less active because of my state, but that doesn't matter. Overall PL year to date, we are actually up 33k more or less, and that's good. So we're moving up, not down, and we're moving slowly but surely enough, going up. And let's see what kind of positions do we have. As usual, I always start with checking the delta and theta of the portfolio, and the portfolio is beta weighted with SPY. So you see we are having very low delta, meaning that we are not very bullish and we are not very bearish. It's very close to being a neutral portfolio, and we are having quite high theta. Could be higher than this, but it's it's manageable. It's okay. 231 per day. So portfolio, as you can see, is designed or has been built to generate cash flow and not profit from the upwards or downwards movement of the stock market. Coca Cola, another condor. We're right in the middle. I like it. 140 max win. Let's just stay there and let the Coca Cola move slowly. I mean, this is really nice widespread condor. So 45 by 53. If you look at the chart of Coca Cola, well, they have earnings coming, but this trade will expire before that. You see that this 52 is somewhere here and 45 somewhere here. Let me actually bring that to visualize this, bring that to the chart. So let's set slices to break even at expiry, and then set those slices to charts, and I bring them there so you can see better what I'm talking about. So this trade remains, okay, now it's like not even visible. This trade remains a winner as long as Coca-Cola stays between those two lines, and it's very likely it will. It's not a big mover. You can see average true range is not very big for Coca-Cola, so I think it's just a nice cash flowing trade. I highly recommend trading Coca-Cola if you are a cash flow oriented trader and want to sell puts and calls and iron condors. Coca-Cola is a fantastic candidate for this. You can see it does not move much. It tends to stay in box, and it did so also in the past. Whoop. Yeah, so Coca-Cola I considered managed. We're like really nicely in the middle of the condor. Microsoft. Well, Microsoft is a little bit also a trade which causes some trouble. So it's our back ratio, and for this, the problem with back ratio is theta. Time really works against us. It's 30 bucks per day. If Microsoft doesn't make a big move, then we're kind of losing 30 bucks a day. If it moves big time down, it's kind of okay. The slope is very slow here. However, what I really want to do is that this actually stock moves upwards, obviously, and it makes a move. So the point with back ratio is that the stock needs to make a move. It can't stand still. If it stands still, I'm kind of losing on it, and it's not nice for my portfolio. I would love Microsoft to go to the levels of 220s and so on, but I don't know if that's probable. It didn't make that move last week. It kind of went there, but then it back down, came back down again with a little even a gap, and now bounced a little bit of the, what is this, 20-day moving average, but it's remains between 50 and 20. Of course, it's above 200 and has some solid support at the level of 200.